President Trump ramping up his attacks today on Fed Reserve Chair Jerome Powell, accusing the central bank of damaging the US economy by refusing to cut interest rates. In a fiery post on his social media platform, Trump claimed that America's rates are too high and even sent a hand-annotated chart to the Fed, blaming Powell for costing the nation a fortune. Let's head to the United States now. We are joined by Oz Sultan from Sultan Interactive Group. Good to see you. What's triggered this latest round of attacks on Jerome Powell?
Well, I think it's been an ongoing thing, right? So we start looking at, where do we sit with crypto regulations? The Genius Act is passed. We're trying to move into new payment rails. ISO 20022, which, retires SWIFT and moves us into this new crypto ecosystem, is right around the corner. And yet we have no liquidity in lending, largely because our interest rates are high. And so I think Trump had looked at what international rates are. There are varying perspectives and correlation of macroeconomics with the United States, but simplistically, I think what Trump would like to drive towards is lower rates equal more liquidity, equals more lending, equals more opportunities for, home buyers to every small business in America.
Yeah, and the startup sector too, which as we know has been struggling because liquidity, and when debt isn't cheap, people aren't going to take the risk on a new company. Let's have a listen now from Caroline Leavitt, the White House press secretary, talking about this and holding up that chart.
The one problem that remains is high interest rates for the American people. The American people want to borrow money cheaply, and they should be able to do that. But unfortunately, we have interest rates that are still too high. So the president sent this note to the Fed chair today. And if you look at this chart, this is a chart of all of the interest rates of many countries throughout the world. The president sent this note to the Fed chair. It says, Jerome, you are as usual too late. You have cost the USA a fortune and continue to do so. You should lower the rate by a lot.
Now, the president loves a chart, but is it a bit too simplistic? Each of the nations, and she rattled them off one by one, including Australia, and many in Australia believe that our interest rates are too high, but interest rates are set by central banks and Federal Reserves, etc., because they reflect the circumstances of the country. How can you compare like for like?
You can't necessarily, but from a macroeconomic perspective, I think there's two things. One is the need for liquidity inside of the lending ecosystem. Two is the opportunity for these rates to come down to increase our opportunities to lend internationally. So we're talking cross-border payments. We're also talking about inter-country loans and the opportunity for the United States to be in more of a pole position for these types of things. This is definitely going to have cascading impacts to currency and currency valuations in the short term. I think the dollar would peg higher against some of these international currencies. That's always a consideration. But in the largesse of this, where Trump is trying to reduce gas prices, reduce food prices, increase liquidity in America, and drive towards entrepreneurship being a new hallmark of what we could do inside of this new economy, there's a need to at least reduce these rates by, I'd say 50 basis points at the very least. But, if you got into severe cuts, you could be talking 1 or 2%.
1 or 2%, which, as you say, would help to jumpstart the US economy. How concerned should we be, given the amount of pressure that Trump is putting at the moment on the Fed Reserve Chair, calling for him to resign before the end of his term, setting up a backstop, essentially his replacement while he's there already as well, appears to be the plan too. But markets don't like this. Whenever he goes too far, markets retreat, and they're essentially saying they do want to see independence there. How far is too far for President Trump to go, but still put the pressure on?
I think markets have seen reasonably short shocks in terms of what the Trump policies are. If we go over the tariffs, if we go over everything in the course of the past 8 months, it's short shocks and then quick rebounds. The markets are trending to the highest they have, this recent period over the course of the past week or so. So I think you could expect a definite sort of short-term shock, were rates cut over 50 basis points. But I think everything would equivocate within a couple of weeks. The big impacts are going to be to foreign currencies inside of this. And I think the larger term impacts would be to international markets, not the US. And largely, Trump is interested in fixing us. So the cascading impacts don't necessarily weigh as heavily on his conscience.
Could Trump's public pressure actually impact Fed decision making in the reverse because they don't want to be seen to be impacted by what he says? They may actually hold rates higher for longer to try and show as an institution that they still have independence.
That's altogether possible. That could have a couple different outcomes, most of which would be kind of trending us into this period of where we are right now, where there's very limited liquidity inside of the market. But it also goes back to what I said originally, right? So we're moving into this new crypto economy with XRP rails and Bitcoin rails coming in. You're going to start seeing new modes of liquidity. The head of Pulte, the head of Fannie Mae and Freddie Mac, recently said that they're going to accept crypto assets as collateral inside of mortgages, right? So we're slowly unpegging from the traditional system into a dual mode system. And I think that's where Powell has to really kind of catch on to what's going on here, because we're moving into kind of a new macroeconomic paradigm, one where we've got multiple segments of our monetary supply really dictated by more than just what these pegs are. And it is quite to be seen. But he could definitely, hold out. And I think this would just play out to far more drama inside of the markets as well as from the White House.
Well, Sultan from Sultan Interactive Group there in New York, always appreciate your insights, your time. Thank you.
Thank you.